Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Every empire of money ends the same way, quietly at first, then all at once. Right now, the storm is forming again. The difference this time, the lifeboat isn't gold, it's cold. And at the center of it all, XRP. History doesn't repeat, but it rhymes like thunder. In 1933, the world clung to gold as the foundation of trust until the rules changed overnight. In 2008, banks built on leverage and greed crumbled in days. Each collapse felt impossible until it became inevitable. Today, we're standing on that edge again, a financial system strained by debt, inflation, and technological denial. Central banks fight fires with gasoline, printing liquidity to hold a dam that's already cracking. You can feel it. Markets twitch before the quake. But every collapse births an innovation. The gold standard gave rise to the dollar system. The 2008 crisis birthed Bitcoin. And now, the digital liquidity era is emerging. A new financial architecture built not on paper, but on instant settlement and programmable trust. That's where XRP enters the frame. Not as another speculative token, but as the connective tissue of a world desperate for efficiency. Think of this moment as standing in 1849 again. The gold rush reborn in code. Everyone's scrambling to find digital gold, but the real fortunes, they belong to the ones building the rails, the exchanges, the bridges, the payment corridors. XRP is one of those rails. While most investors chase hype cycles and headlines, institutions are quietly positioning. They've seen this movie before. Just last quarter, while other crypto funds faced outflows, XRP recorded tens of millions of inflows. That's not noise, that's coordination. Smart money doesn't scream, it accumulates. Meanwhile, governments are awakening. The Genius Act, recently signed into law, marked the first genuine alignment between the SEC and the CFTC. For the first time, digital assets, especially stablecoins, are being given statutory definition. It's the early scaffolding of a new market structure. And who stands to benefit most when the rules finally favor compliance and speed? The network already engineered for both, XRP. Look back at history's pattern. Every financial empire builds walls of regulation until someone invents the bridge that makes those walls irrelevant. The telegraph outpaced the Pony Express. The internet outgrew cable monopolies. Now the blockchain rails are overtaking SWIFT and settlement delays measured in days instead of seconds. The Fed can't print trust. It can only react. But trust is exactly what XRP's ledger manufactures. Cryptographic, audible, instantaneous. In a world losing faith in institutions, speed becomes confidence. We're not watching a crash. We're witnessing a transition from the analog age of money to its digital mirror. And storms, while violent, always clear the way for what comes next. Imagine it's the 1850s again. The world hears rumors of gold in California. People sell everything, chasing fortunes across deserts and oceans. But it wasn't the miners who became legends. It was the builders, the merchants, the railroad owners, the bankers who moved the gold. Fast forward to now. Digital gold rush is on. Except the gold isn't metal, it's liquidity. And XRP is the rail line connecting the new mining towns of the blockchain frontier. Every corridor Ripple opens, from Singapore to Dubai, from Tokyo to London, is a modern Silk Road. Not silk and spices, but dollars, yens, and euros flowing through digital trade routes. Each connection shortens distances, lowers friction, and increases demand for the bridge asset that makes it possible. This is the new Silk Road of money, and XRP is the caravan leader. We're seeing early adoption echo ancient trade logic. Merchants in Asia, banks in Europe, remittance firms in Africa, all looking for faster, cheaper, more transparent value transfer. The same forces that once united continents through trade are now uniting ledgers through code. Every corridor lit is another artery in a global financial body that doesn't sleep. And with every artery comes demand, real transactional demand, not speculative hype, the kind that stays when bulls run fade. Developers keep building. The XRP ledger isn't stagnant, it's evolving. Automated market makers are live, transforming the network into liquidity engine. Hooks bring lightweight programmability for institutions that need compliance, not chaos. Together they form the first decentralized settlement machine, engineered for scale. Think of it this way. While most blockchains chase the dream of replacing banks, XRP is quietly upgrading them. That's the brilliance. You don't win a revolution by burning bridges. You win by building better ones. Custody solutions from Fidelity Digital Assets and Coinbase Custody confirm it. Institutional grade rails already here. The insurance, the compliance, the reporting, all boxes checked. That means pension funds, retirement accounts, and wealth managers can finally consider allocation. Not someday, now. And when that gate opens, it won't be retail money trickling in. It'll be trillions in institutional liquidity seeking compliant, scalable utility. The first movers will be assets that fit those criteria. And XRP checks every box: speed, compliance, real-world use. Remember, miners didn't become legends. Builders did. In the digital gold rush, XRP isn't the gold, it's the railroad. And when the world's liquidity starts to move, the rail owners always profit the most. In 1944, 44 nations met in Bretton Woods, New Hampshire, to rewrite the global financial order. They tied every major currency to the US dollar and the dollar to gold. For decades, that system ruled, until 1971, when Nixon severed the link. Overnight, money detached from metal, and a new era of floating exchange began. Now we're witnessing the digital sequel, the modern Bretton Woods. Governments are redefining money again, only this time the anchor isn't physical, it's technological. Tokenized assets, CBDCs, instant settlement, a network reserved system where value moves at the speed of light. And in this architecture, XRP plays a neutral bridge, not controlled by one nation, but trusted by all mathematics. When U.S. regulators finally align with Europe and Asia under coordinated frameworks, the uncertainty, discount that suppressed XRP for years disappears overnight. Markets don't wait for permission. They react to clarity. That's when reevaluation happens, not from hype, but from structural repricing. Think of post-war reconstruction, nations rebuilding, liquidity surging, industries booming. That's where we're headed again. Only this time, reconstruction is digital. Institutions scaling into crypto aren't chasing memes. They're building the next 50-year foundation of finance. Supply dynamics add the spark. XRP circulating float shrinks with every corridor launched. Every custodian account open, every liquidity pool locked. Reduced supply plus rising utility equals one outcome: asymmetric upside. The math isn't magic, it's mechanism. We're entering the eye of the storm. Calm, deceptive, powerful. Retail investors sleep on consolidation phases, but institutions love them. Accumulation is quiet. Breakouts are loud. By the time headlines scream XRP is back, the smart money will be already in position. And the macro backdrop, perfectly timed, the Fed preparing cuts, liquidity cycles turning positive, global debt forcing innovation. Every ingredient for an explosion is sitting in the bowl. All that's missing is the spark of confidence, the regulatory green light that flips the market from fear to frenzy. Here's the truth. Every great financial transition feels impossible until it's over. The gold bugs doubted paper money. The bankers doubted the internet. The skeptics will doubt digital liquidity right up until the day they're using it every day. XRP isn't just another coin. It's the quiet infrastructure of a world rewriting its balance sheets, the bridge between chaos and clarity, the arc in a storm. And if history teaches anything, it's this: fortune favors the builders, not the bystanders. We are living through the digital gold rush, traveling the new Silk Road, witnessing the birth of modern Bretton Woods. The map is unfolding right now. Liquidity corridors forming, laws aligning, institution awakening. So the question isn't if the reevaluation comes, it's whether you're prepared when it does. Because the storm isn't a warning, it's an invitation. And when the clouds finally break, those who built the bridges will already be standing on the other side. History doesn't reward those who waited for permission. It rewards those who saw the pattern before the crowd did. The miners of the 1800s dug for gold. The innovators of the 1900s built the rails. The pioneers of the 2000s coded the networks. Now it's your era, the age of digital liquidity. The storm is coming, but so is clarity. And if you're holding conviction instead of fear, you might just be holding the future itself. This is not financial advice. It's a reminder that every revolution starts quietly until it doesn't. If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.